Bloomberg's Al Hunt spoke with U.S. Treasury Secretary Tim Geithner in an interview today for Bloomberg's Political Capital with Al Hunt. He asked Geithner if the jobs market has now turned around.
Progress, but not good enough. The key test is when you see companies across the country starting to create jobs, add to payrolls. We're getting closer to that point. I think it's getting closer. That's the most important thing. But the economy is now growing. Right. And growth seems to be gradually strengthening. You see pockets of real strength now in technology and exports, and I think that's hopeful signs of progress. We've got a ways to go.
You've spent much of your life dealing with probabilities. So let me ask you that in that context. What is the probability that the jobless rate will be below 10% a year from now?
Quite high.
Quite high. So you expect it to be at least in the 9s?
Well, I'm not an economist, right. And as you know, economists don't know much about the future.
Right.
But I would think if you look at what business economists think, and you look at academic economists across the spectrum, right. I think most economists would say that you're in an economy that's growing, gradually growing over the course of the next 2 years, and the unemployment rate will start to come down.
Okay. Let's talk about some of the initiatives to address this already too high unemployment. You said there's a pretty good case for a tax credit for hiring new workers. Roger Altman, your friend, philosophical soulmate, has written that there should be a $5,000 employer credit for each net new job. That might add as many as 1.5 million new jobs. Can you support that?
The President's looking at a range of ideas. You know, he's asked us to look at give him a range of choices, and he convened some of the best minds across the country yesterday to look at a whole range of ideas, including tax incentives for investment, tax incentives for energy efficiency, tax incentives to spur job creation and hiring. In that category, the latter category, there's a range of ideas. You mentioned one of them, but just to be frank about it, there's a lot of people in the business community and the academic community who are not confident that particular proposal would be that powerful. But we're going to keep looking at it.
So you don't think that would add 1.5 million jobs? You're skeptical about that?
Personally, I wouldn't associate myself with any estimates of what these things might actually do. That's just too hard to judge.
Just trying to get an idea if this is something that you think, all right, we really ought to take a good hard look at it.
Absolutely.
I'm skeptical.
We're taking a very good hard look at it at this proposal. I'm just saying at the moment, I wouldn't say right now that we're confident that's going to provide the most powerful bang for each dollar we spend going forward. And you know, what we're looking to do is try to make sure that we're now driving growth and innovation with things that can help spur investment and job creation and give us the highest return on any additional dollar of taxpayer resources.
Let me ask you about a couple more. The Tobin tax, levy on global financial transactions, favored once by Larry Summers, now pushed by Gordon Brown, Warren Buffett, and others. You've been a naysayer, I thought, but Speaker Nancy Pelosi said after a conversation with you this week that you were now open to the idea.
Look,
are you?
We're looking at a variety of different ways to make sure we achieve the following core principle, and this is at the center of the financial reform proposals we have now working through the Congress. We want to make sure in future financial crises that the taxpayer are not exposed or not put in a position where they bear the costs of what the government may have to do to put out a major financial fire. That's a basic principle. So I've said from the beginning, and I'm very committed to this, to make sure that, again, in the future, if the government is exposed to any losses, those losses should be recouped in the form of a fee that is paid by the financial institutions that caused the crisis. That's a simple principle. Now, there are lots of different ways to do that. Our test is going to be what's going to work, what's going to have the biggest impact.
I understand that, but the Speaker said specifically that you were open, you told her you were open to the idea of the Tobin tax. Are you?
No, what I'm open to looking at is a range of different ways to achieving this objective, making sure taxpayers are not exposed to the cost of bearing the burden of solving these things in the future.
You still think the Tobin tax is not a very workable idea?
I have not seen a version of that I think works, and let me explain just one reason why that's the case. Otherwise, people would have done this a long time ago. You know, financial capital, financial transactions in today's world, they're going to move in a heartbeat to get around any tax like that. And that's why people say, and I think the Speaker said, if you can do it globally, comprehensively, it might help, but I think it's unlikely that's going to be possible. Even then, there's a real risk that retail investors who've got fewer choices, they end up bearing the cost of the tax. But again, our test is going to be what's going to work, what's going to satisfy that basic principle.
Let me ask one more. The White House did say today that Robert Gibbs said that you wanted to use some TARP funds for specific job creation. How much money and how many jobs are you talking about?
We're going to lay out in some more detail in the next couple days a range of important things about the TARP. We're going to explain that we're going to have substantial savings, that we're going to have very substantial resources we can make available to support not just the immediate priorities the country faces in spurring investment and job creation, but also to meet our long-term fiscal challenges. Those resources are going to be very, very substantial because we have been very successful in helping stabilize the financial system, bring the cost of credit down, open up these markets at much, much lower costs than anybody anticipated.
Can you give me any idea how much the TARP?
Very substantial, but I want to lay out the numbers in the detail. One thing I can say that I think is helpful is we now estimate we're probably going to have $175 billion in repayments from the banking system by the end of next year. That's substantially more than we anticipated even just a few months ago. You saw Bank of America raise a whole bunch of capital last night to help repay. We think there's a substantial amount ahead, and that will mean that by the end of this year, we have roughly only a quarter of the initial investments outstanding in the banking system than we had when I took office.
You were the head of the New York Fed right in the middle of the crisis a little over a year ago. Some Goldman Sachs executives have recently said their firm would have been okay without the federal assistance from the Federal Reserve and others last year. Is that your view?
My view is this.
Did Goldman Sachs need the federal government 14 months ago?
The entire U.S. financial system and all the major firms in the country, and even small banks across the country, were at that moment at the middle of a classic run, a classic bank run.
So they would have been at risk without the federal
I think the system was at risk, and the big institutions were not. None of them would have survived a situation in which we had let that fire try to burn itself out.
A number of these firms that have repaid the government are planning to pay out record year-end bonuses. They say they've repaid the government. Is that okay with you to give out record bonuses?
No. Our judgment is we have to end that era of irresponsibly high bonuses that helped create these incentives for excessive risk-taking.
Would you like to see them restraint on those bonuses this year?
We want to see fundamental constraints in how senior executives are paid at these institutions so that their compensation is much more tied to long-term gain. When they take risks, that money is at stake, is at risk. It can be clawed back. The basic problem we face is across the system is that executives were paid for taking imprudent risks, and those compensation packages were not at risk. You couldn't bring them back. We're going to change that.
And I understand your long term. What I'm asking about is this year, would you like to see those big banks show more restraint than they say they're going to show on bonuses?
My view is it is very important that we change the way these executives are paid, the form of compensation, this year.
All right, you can catch more of Al Hunt's interview with the Treasury Secretary, Tim Geithner, on Political Capital all weekend, but starting tonight at 6:30 p.m. Eastern Time.